Good morning, everyone, and welcome back to this new session of analysis. Let's do a recap of yesterday, but we'll keep it simple, just as expected. It was a day with low volumes and a narrow trading range, so essentially a day that went by unnoticed, with the market moving sideways for most of the day. Today has also started off in the same vein as yesterday, even though today there are some macroeconomic events, not exactly decisive, but still quite important. There are the sales figures, the retail prices, which are definitely the April numbers are particularly closely watched, so they will include Liberation Day, and basically they will reflect the whole surge in purchases. Before the tariffs came into effect, they will also include, in short, the drop in oil prices from 65 to 55. So, in my opinion, it's a figure that could be perhaps somewhat distorted by these factors. And frankly, I don't expect any particular movements, just as for come on. The data released on Tuesday, where we weren't expecting any major movements, in the same way today I don't expect any particular movements. Then there's Powell's press conference afterwards, and we'll see if maybe he'll give us some more. From a macroeconomic point of view, the situation is fairly calm. According to the indices, the United States is ahead, outperforming Europe. We've already mentioned this in the past, and there are a few factors supporting this. First of all, there's a sense of easing on the buy side. There's a return to buybacks. See a zomba of the companies after the quarterly reports. And there are a number of funds of major asset managers who are underweight. In America, this is because by mandate they act according to volatility. So when volatility increases, they are forced to underweight their equity portfolios. As a result, when volatility is decreasing quite significantly, they obviously have to return to the market. And so all this money flows on into the markets. It obviously supports above all the large companies. So they come back strongly into the spotlight. Magnificent at the expense, of course, of small and medium-sized companies. We will see this later with the Russell, which is dropping a bit and is losing relative strength compared to the Nasdaq and S. The flip side of all this, as we have already mentioned, is the worrying rise in yields, especially on the American 30-year, which is hovering around 5%. Let me show you the chart I already showed. Here it is. This is a chart of the yield on the 30-year US Treasury bond, and we are reaching worrying levels. Breaking through the 5% mark could lead to a new portfolio rebalancing with no money that will definitely flow into bonds. And obviously, there will be selling pressure on the stock indices, especially on the strong ones. So Nasdaq and Standard & Poor's, so maximum caution is needed. Let's also closely monitor this scenario. With this introduction done, let's move on to the operational side, starting with the Nasdaq. As we were saying, basically yesterday was a range-bound day, and we're still stuck in this trading range, so we can easily identify it. So let's monitor 21,430 to the upside, and of course let's watch 21,050 to the downside, where there are also a series of accelerations indicated by the KSP indicator. I'm not going to load them up for you right now, but they definitely make it important. This 250 area is significant, and if it breaks, it could have worrying consequences, because it might push the price down to 21,000, which in my opinion is the next support area for the Nasdaq. On the upside, of course, we should first monitor 21,410 and 21,430. A possible breakout of 21,410 or 21,430 could trigger a move but there would be tests of both RD0 and RD1 in the 21,510 area. In my opinion, this is the real watershed, because at 21,530 and 21,560 there are other important levels to break through. So a breakout here could then launch further moves even towards the area of the highs. As for ES, the situation is currently a bit worse because it has broken out of the trading range. The European markets have been open for about 40 minutes and it has settled on SD1, from which it bounced. Perhaps now repeating the move. It may be attempting a retest, so let's monitor this area closely at the moment from below, because obviously right now we need to get back into the range and hold this level, because you can see how it was. Thank you. First broken, then tested from below, and then it went on to test the next level. So let's monitor this level now, because a break of SD1 could push prices down to the 5.8 and 50.8 and 60 areas, where we also see significant accelerations. The next levels, obviously, if it breaks through this 5.8 and 60, well, prices could easily move up to the 5.8 area as well. Of course, to the upside, we need to monitor. The first step is to get back into the range. So 5.8, 90, 58, 59, and 90, 5.9. And the next step is obviously to break through 5.9 and 25 for possible moves, probably even into the 5.9 and 60 area, which is then the RD2 area. Let's also look at the other two American futures, starting with the Dow Jones. You can see how it's already going down, probably as a consequence of what we mentioned earlier. So it's right in the middle of this little channel. I'm not going to draw it, but it's a nice little channel that you can work with, which will probably lead prices to test this area. So with the same D2, whose break could easily bring prices back down and close the gap left at the beginning of the week. A similar situation applies to the Russell, which has lost the 200 level that was important to hold. You can see that after losing it, it slid downwards already yesterday, whereas the Nasdaq and ES moved sideways. The Russell has already broken down and has been trading below. Now it's resting on the 280 area, which we had pointed out and which corresponds exactly to this low here. And now, this is basically the key dividing line at the moment, because holding this area could bring prices back up to the 2100, 2110 range. So to retest this whole zone here, a definitive break below this area could easily push prices down to 2050 or even 2030, essentially closing the gap, just like for the Dow Jones. Obviously, these are scenarios we need to keep in mind for both the ES and the Nasdaq as well, because the situation is quite similar. I'm showing you ES again, because this too, of course, needs something to trigger it. But let's always remember that this gap in short is still there to be filled. Let's look at oil. No, let's look at ourselves. First, the DAX, which yesterday, in short, like the Russell and the Dow Jones, has faded a bit, has lost a little, is losing relative strength, broke through 530 this morning. As you can see, it broke yesterday's lows, tried to retest, went down almost to ST2, and now it's retesting the area from below again, but it was immediately pushed back. So we will probably see another test of this area with a possible breakout, which could bring prices up to the 22,180 to 22,220 area. Obviously, we will keep monitoring the entry and the re-entry into the range, which is supported by these two lows, 1 and 2. So a possible return into this range could also bring prices back to this area, 23, 6, and 40. We were talking about oil. Here it is. Yeah, it's losing a bit as well since yesterday, basically. It almost made a double top, opening higher, and then repeatedly testing the break of 63.50 from below, more or less. Yeah, after that it couldn't make it, obviously. The previous low was broken and it went back to retest the previous high, which was stopped right this morning. We're already at the lower end of the range, so you have the weekly levels if needed. So holding this area could bring prices back to test these lows here, so around 61.70. And then, well, we'll see what happens, because it could be a test from below for a new rejection toward even lower targets which could bring prices down to around 60.20 or 60. On the other hand, a breakout to the upside of this pivot point drawn at 61.80, 61.60 could bring prices back up to around 62.50 at STT and confirm this low here around 62.80. I also wanted to show you gold in a bit more detail. So this is an all-hourly chart, and after the strong upward pushes that we pointed out, in various steps. Now, this morning I did this analysis, and we can see how this decline from the high around 3,510 has formed two clear downward waves that I measured and then plotted here. So this year there have been two downward waves. The first wave brought the price down here, then there was a retracement, a slight overshoot, and then the price was brought back to test the area of the previous highs, which it didn't even manage to touch. After that, a second downward wave started exactly with the same intensity as the first, Tombaka, where the price then stopped, bounced back a little, actually even less, so it retested this whole area here, excluding this zone from which this third wave has now started. Let's say its target would be around the 3,050, 3,055 area. This blue line was the target. One of the targets we had initially set based on this previous analysis, which we reached, and then it broke out upwards. Now in short, we'll keep monitoring the break, obviously, of this area here at 3,055. Well, but if it doesn't bounce here, we might expect a small rebound here that could bring prices back up, well, even to the target area of 3,180, and then move on to form a fourth wave. So let's keep an eye on this situation. Maybe I'll post it. No, I'll post it in the chat as well. Let's obviously take a look at SPX tempo, which at the moment is forming this continuation flag, let's say. We'll see then at the open. This is basically this is the target from the analysis we did for the fifth wave. This would be, if I remember correctly, yes, 1, 2, 3, 4, and 5. So this would be the target for the fifth wave. We'll see if we ever get there, because I'm noticing, well, some selling this morning in the market, but we'll see how things develop over the course of the day. So let's obviously take a look at Bitcoin, which after failing to break through the highs is now coming back to test the 100,000 area. Cento Tampa, this morning it was already at 101, 101, 102, 101.9, but it's, well, as you can see, basically continuing yesterday's movement. There was a rebound to retest the red zero, but it didn't quite make it, and since last night it's resumed. Its descent very precisely accompanied by the VIX, so it's absolutely valid. It has already broken through the levels, the BC3 levels. As you can see, this is the European one, it's working below them, so I'm probably expecting a test of the 100,000 area without any issues. Here then, obviously, if this level doesn't hold, or if it does hold, it could bring prices to stabilize right around this area here at 101.5, 102. A break below 101, or rather 100,000 core, could also trigger larger downward movements down to 98, 97 as a first step. Let's also take a look at euro dollars and dollar yen. We're here. Obviously, the dollar recovered a bit yesterday against the euro. As we pointed out, it brought prices back to the 1.12 area, having held that level. This area here, well, it went to test 1.1260, but was then pushed back. That was this area here, but it stopped just below it, right at the last stronghold. So this makes me quite hopeful. Probably a new test here will lead to another test of the 1.1260 or 1.113 area. A breakout then could lead to larger movements. Obviously, we're keeping an eye on this whole area for a possible move downward today, if not exactly at the level of 1.1111, 1.1177 or 1.1160. As for dollar yen, now, well, it has just formed a nice double bottom, more or less matching yesterday's low around the 145.50, 145.40 area. It's trying to bounce back. If it fails to recover the 146 area, and thus breaks through these levels here, these highs, it will definitely open up new room to the downside, perhaps for a test of the 144.50, 143.70 area. To the upside then, let's keep an eye on this area here, because a break above this area, so 146.16, 146.20, could bring prices back up to test 147, 147.20. Perfect. We've reached the end of this daily analysis. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.